If you had to put your money in today, where would you do it? Would you buy Swiggy or would you buy Zomato? What have you told your clients to do?
Or none of them.
Or neither. Yes, I guess that Neeraj wants to jump in with neither.
Yeah, I think thanks for adding the third option
Oh,
because it is
no.
basically in that camp. Of course, if you are a very, very, very long investor and you more care about time and opportunity and see how the decision making shift from the current consumer set to completely Gen Z ecosystem at some point of time, of course, these companies will do really, really well. Our view of not suggesting anybody to add at this point is, as I said earlier, the competitive landscape in this business, both on the food side, slightly and much more on the QC side, would play out over next 18 to 24 months, and that would mean there would be limited upside on the EBITDA. In fact, Street would see probably contraction to the current estimate. So that is what is making us slightly worried about this space. For a real long-term investor, of course, these are large time and good play to them.
Okay, so that's the verdict. Neither of the camps right now. Maybe so. Just before we wrap up, Rahul. And sorry if you already mentioned it, but just trying to understand. Assuming that other things remain the same, and assuming that the broader multiples for the markets remain the same as well, what levels or what valuations would you find comfort in buying them? Would it be 15-20% lower, assuming ceteris paribus other things remain the same? Would it be 25% lower, or would it be more?
If you look at the current operating profit of the business for Zomato, is still a small number compared to its valuation. It would sound 100 of X, right? So, and Swiggy is yet to get into that positive annualized cash flow on the operating side. So, of course, the valuation 15% down, 20% down is not something which will become very mouth-watering. What we need to better gauge on that how just like how the food business eventually became like a duopoly, and there is a gradual pricing power that is getting played into it, as we see from platform fee getting increased every now and then, compensating for the increased delivery cost. I think we need to see that how in QC business also it would get stabilized. So since there is such an aggressive plan wherein companies are talking of doubling and tripling of the capacity, these are not easy asks where you double, triple capacity and also want it to be efficiently run. So I think valuation would be more function of how the competitive landscape shape up, and pure correction by 10, 15, 20% would not make it an easy buy either.
Okay, well, difficult to call, but certainly not now. That's the verdict. Rahul, maybe in 3 months' time, we talk about this issue again. By then, maybe both of these might have traveled a fair bit. Whether up or down remains to be seen. But thanks for joining me today. Really appreciate your time.